What is going on, traders? Welcome to this week's weekly market forecast. We have quite a lot to cover today. I've got a list of different things that we got to check off. It's a busy week in the charts and also in ProTrader as a whole. So let's go through a recap of last week's setups. I took 5 trades, 1 I'm still in, and 4 that were closed out last week. So let's fly through those. Green ones would have closed out. Purple is what I'm still in, and then we've got some other special mentions, and we'll move on to the watch list creation for this week towards the end of the call. We're also going to talk a little bit about scaling. So what is a good percentage return? I know we always talk about 5% in ProTrader, and 5% monthly return is more than enough that you never have to pretty much work another day in your life, in quotations. But we'll check that out. We'll speak a little bit about that and break down our in the scaling account scaling tool that we've got in ProTrader, and then we'll go through the weekend intensive, which is happening this Sunday. It's going to be awesome, and how you guys can be a part of it, or bring your friends, family along to kick off their trading pursuits if that's something that they're interested in. Cool. Let's jump in first. Euro, Aussie, this one here was a IBOA. Let's jump through onto the major charts here so we can see, granted, after the charts have, after the trade is played out, it's always a little bit messy because I've got these tags up here and such. Maybe let's see if we can shimmy them higher, get them a bit out of the way. There we go. So obviously entered after this bearish engulfing candle, big high test. I did cover this one a bit recently, or on Wednesday's call last week. And we saw price was pushing to the downside here. Let's tidy this up. Now there was a support level here, so let's go back to what the daily candle looked like at the time. Looked like such. Now we didn't have a huge amount of bearish confirmation on the daily, right? We just had this high test and a DDP to the downside, so or one daily bearish candle. So it wasn't a solid DDP, but it was the lower time frames that really gave me a lot of confidence on this one. So moving down to the lower time frames, we can see the 4 hour, we're on our way down to the 4 hour 50, but it wasn't really giving us too much. 4 hour 50 would have been is the typical profit target here, but it was really here on the 1 hour where this position was quite magical. We'll go back to what it looked like at the time of me placing my entry. Why will you not delete? There must be a bug going on here. Let's go again. 4th time's the charm. So it was as the new daily pivot lines form. Now I'm over in Europe now, hence why I don't have the cool ProTrader glowing background as per usual. It's back in Bali. But this gave me the luxury of that night. It was, I got to change this back to, where are we? Not London, we're over here in Amsterdam. So this was at 11 p.m. at night, and I saw price had broke down. It was pulling back. We had this trend change here. Pivot line lined up very nicely with the IBO entry. So the IBO is using your fib retracement tool. Anybody who's gone through ProTrader playbook will know about this one. So drew from that high to that low, 382 lined up nicely here. We had the daily pivot line here. We had the 1 hour 50. So it was very similar to a pip snatcher, and you could have taken this one certainly as a pip snatcher with the 50 EMA and the pivot line. It would have looked like such, and you would have had a positive outcome on that one as well, like that. Trading more or less down to those recent lows, could have gone up a smidge higher. But I saw that we had this this IBOA setup forming. So the 4 hour 50 EMA was around here. We could perhaps toggle that on. 4 hour 50 EMA was, when he loads up, down here. Typically the profit target is the 4 hour 50 EMA, which, as we can see, price did go down and smash that. However, I targeted these recent highs or just a little bit above that, because we could see on the daily time frame we had a pretty hefty support zone, which I wasn't confident trading through. We can see we did get this really pretty solid low test on the daily, rejecting both of those, that support zone. It happened later, of course. It happened up here. So after hitting that 4 hour 50 EMA, but I was happy with that 1.95. This is one that I set just before bed. So it was, as I said, 11 p.m. Let's go ahead and make these visible. So my entry order was placed on this candle here, on this one. for right on the daily pivot line. So what was the logic behind my 50 EMA placement? Sorry, not the 50 EMA placement, my entry order placement with the 50 EMA up here. Rather than 382, because the 50 EMA was a little bit far behind, I put it just right. I took the entry order price of the pip snatcher, which the IBO can put your entry order anywhere from 382. That's the standard, but it can be 0.5. I never go above 0.5. But in anticipation for that 50 EMA, it's a simultaneous break and retest of the 0. Or pull back to the 382 and the 50 EMA. But then when we've got the pivot line as well, that just seemed like a more accurate entry. So I took the entry price of the pip snatcher and then stop placement of the IBO and profit target of the IBO, but slightly refined up because it was the of that support level that we had there. So like that position, literally by the time I woke up the next morning, so at 3 a.m. it hit profit target. It would have hit the 4-hour 50 at 4 a.m. or 5 a.m. But I woke up to 1.95 winner. So happy with that one. Next one on the list was dollar CAD. So that one was obviously a little bit more discretionary. I know most of our pro trader students probably didn't take it because it was a bit more advanced, but I liked it. So this one here, again, there's tags and things everywhere. Ignore this. We had dollar CAD's been treating me nicely. I took a short position back here for 2.18. That was the week before. But then this week or just last week, so it's seen similar big bearish high test here. Price clearly had been slowing down. We had seen price slowing down here where I banked a profit, and then it kind of was hitting this resistance level here, or this top here. Very obviously, very clearly indicating that price had topped out here. High test following this doji. Big bearish engulfing high test. And then which gave me a confident DDP to the downside. We did have this minor support level here as well, which we could probably find on the 1 hour time frame. I know these charts are absolutely atrocious. They're very, very messy. You know what? I'm going to go ahead and clear this one off for us. That was the previous setup. So we saw this little support level, which was quite a nice entry point, provided a nice entry. We had seen a lower low form, a big break, retest, pulling back to this zone here. Entry order was set as price. That's right. Entry order was set on this high here because we'd seen price had already come up, rejected that. I wasn't sure if that was going to hold. I certainly could have placed an entry order. I think I got the alert when it was crossing the 1 hour 50. That's what I set the alert on from memory. And then price had started pulling away from there. We can go and see at the time that I jumped on the chart. So if I go have a look at like the 2-minute time frame, price had run up, hit this a few times, and I believe I set the entry order somewhere over here as price had fallen away back up for this high here. Back on the 382 because I wanted this one to be, I wanted to get a sharp entry price on it, and it was entry order was triggered on that high there. So it was somewhere around this. I jumped onto the chart, seen it had been attacking 382 a few times, but I wasn't willing to take a live entry at such a low price down here. So I set the entry order. I must have actually set the entry order somewhere around here because it would have triggered on that one. But either way, triggered there. Oh no, it wouldn't have because this is slightly higher. Yeah. I didn't put this specifically on the 2-minute time frame. As we can see, it was just on the 1 hour. But it was during that 1 hour candle where we formed this high test, and price came back to hit the red line here, which is my entry price at that point. So I didn't FOMO in, I didn't greed in, because that can cost me a decent amount in reward risk ratio, right? I'd seen it attacked it a few times, was happy with that. Cool. Placed the entry order, entry triggered, and then went on to I managed the trade a few times here. So stalled, went sideways for 4 hours. Now this would have been a fantastic entry price had you not got in then. So this is a CBO. So stop placement was up behind 0.382 or 0.618, sorry, which is the green line here. If you're newer to Pro Trader and you haven't gone through Pro Trader Playbook, these setups might not be making much sense to you. But and especially with all the stuff on the chart, I don't do chart analysis with it looking this scruffy. You guys will see on the charts coming up how I do my chart analysis. But when you're in a trade, You know, these extra lines here, this is my trade management. So there's a lot going on here at one time. So if you're new here and you're like, this looks like I could not understand it, I can only understand this trade while looking at it with all the markers and such, because it was a trade that I took. At the time of the entry, this looked very, very clean, very obvious. So you would have taken the entry, break, retest 382, break, violation of that 4 hours, so the 4 hour 50 is no longer in play. So it was this Andreas method style. Andreas is one of our top day traders. Stop behind 0.618 as per strategy guidelines. Profit target down to recent low as per strategy guidelines. Certainly could have pushed it a little bit further, but that was where the daily 20 EMA was, and also the support level that we had seen further back here, so I didn't want to push it too far. Ran down after stalling for like 3-4 hours. Boom, 1-2 candles, profit target hit, 4 p.m. So that one there was a 1.46%. Next one, Swiss yen. We have a clean, lean, simple pip snatcher. Go back a little bit further. So we need to see where the lines were. Yep, so we could see we had the big bearish engulfing candle here form, was the previous day's candle, and it had broken the support level. Right, so that was the major thing on the daily. Big momentum to the downside. Now I wasn't analyzing the current day's candle because that was still developing, but this big bearish engulfing was the previous day's candle. Massive momentum to the downside and smashed through this level. So I'm happy with that, right? I was expecting it to maybe pull back to that level, which it did, which was where I took my entry for the most part, and then continue to the downside, which is exactly what we saw happen. So we can see here pivot lines formed very nicely. So the pip snatcher is pretty much straddling the pivot line entry here, stop loss here, profit target down at recent lows. Now, when I said I had an alert on the 1 hour 50, now how price would have looked as it was approaching or hit that 1 hour 50 was a big momentum candle to the upside. I wasn't willing to take that entry at that point, at that moment in time, because there's so much momentum. Now, next candle as well, this was also another momentum candle. So at this point, I was waiting for a live entry rather than entry order, where everything up until this point has been entry order based, which means I've set the order and wait for my broker to fill it when it reaches the objective price. It's very hands off. It doesn't take much skill. It's the simplest execution method. Now with the live entry, I waited. So this is where we look at the micro time frames, the 2 or the 5 minute, and wait for a certain catalyst to break. So I'd be actually back up on the hour. Now I can see I needed to wait for deceleration, right? It's one of the core principles to form here. So okay, we needed to, because this could have just kept rocketing up with the amount of momentum that we had, bullish engulfing. This could have just kept marching up and hit the stop loss, right? So I wasn't prepared to enter after during amidst so much momentum. So in this one, I waited for the turnaround to happen, some either deceleration or some bearish pressure, and then as we can see, going down on the 5 minute, waiting for something to happen. Now what can we see? I waited for, okay, the 5 minute 50 EMA had been holding. Now it broke. I placed the entry order back on the 5 minute 50. Boom. So it was this break and retest of the 5 minute 50, and that's exactly where my entry triggered. Because I didn't want to take the entry too low here, because this would have, if this is my entry objective or ideal entry price is that pivot line there, then the profit target would be all the way down to, I didn't want it to be pushing too far beyond. So if my entry order was, if I entered down here, my entry would have been a slightly worse price, which would have increased quite a bit on my stop distance, and then my profit target would have had to go somewhere much further down here, which is not what we want. So how did that play out? Ran on, flapped around for a while, and then hit profit target there. Cool, happy with that one. Quick one-to-one as per pip snatcher guidelines. Why was it a pip snatcher and not like a CBO or an IBO like the other ones? The 4 hour 50 was behind us. We didn't have that protection. We couldn't push it. This is just a textbook pip snatcher, simple one-to-one in and out position. So that was the third trade. My 3 wins, then I had 1 minor loss. This loss was a little bit annoying. It was on my prop firms closed this one out because it was coming up to news. So here was a trend chaser, which is the simultaneous break and retest, the 2 minute and 10 minute 50 EMA with the customized fib tool that I've got here. So very mechanical stop placement, profit target placement. Ran down here. Now we can see this is where I took my entry price, or the entry was triggered. Quite a more decent chunk. I placed my entry order back here at 12.50. News wasn't coming in until 2:30, so I was hoping that this is on the 10-minute time frame, so it moves quite fast, right? The micro time frame setup. I was hoping that we're going to get either run on, hit stop loss, or hit profit target, or get somewhere in that profit zone before news kicked in. Did do this complex pullback, triggered my entry here, beautiful. Ran on, quite a bit of juicy profit down here. Next candle here, big spike. Now you'd think that this one would have closed me out. It didn't. Either would have. This is the volume candle. This is when news hit. So you'd think it would have either closed me out here for profit or taken me out for a loss. With if the spreads really spiked and the price was sitting around here, but then the current floating price plus spread with a big spread spike, maybe that would have taken me out. But interestingly, it wasn't that candle. It was like 2:44 p.m., which is 14 minutes after the announcement, that my position got closed out here. It didn't even hit stop loss. So this is a bit of a weird one for a minus 0. Excuse me, 0.22 loss due to news, and then went on to hit profit target. So it was a valid setup. I like the setup, but just because news fucking kicked me out of that one, that's how it goes. It was a bit of an aggressive call, but I like the setup. It was very clean. It is what it is. Minus 2.2. So we have 1.95 from Euro Aussie, 1.46 from Dollar CAD, the perfect 1.00 from Swiss yen, and then minus 0.22, which gave us a total of 4.19% last week, which 4.19% is a very good result for 1 week, right? Now, we talk a lot about 5% a month. If you can do more than 5% a month, fantastic. And if that can be your average. So if you were to do a weekly target or a weekly benchmark, now, yes, I've got negative weeks, I've got negative months, I even occasionally have negative quarters. But 2% per week is a great benchmark. If you're doing, so 4.19, great, I'm 80% of the way to my monthly target already. And last week, if you guys were following me, I had a fantastic week last week as well. So I'm coming up for a double-digit month. But 2% per week is about 8% per month, and you might miss a week here and there, and then settle on average at 5%, let's say, per month. Now, why is that such a magic number? And let's jump in to this one. 5% is, actually put my face down here. In ProTrader, we teach you how to pass prop firms, right? Make myself smaller. Passing a prop firm challenge, the minimum's kind of like 100k. Now you can do 50, but most people do 100 or 200. Now let's say that you started with 100,000. You passed, you worked hard, you traded a demo account, traded $1,000, £1,000, €1,000 account, whatever, until you got the skill set that you're confident to be able to pass a prop firm challenge. You pass that prop firm challenge, that's 100k prop firm that you've got, right? So it's not even 200. And let's say that you didn't even pass another prop firm challenge again. Now, if you pass one, you can pass them all, more or less, right? So you might as well march on and get a 200, 300, 500. But let's just have a look at the power of this, right? $100,000. Now, your monthly income from that, if you're making a 5% monthly return, so you're making 5% monthly return, the monthly income from that account, right? We're not factoring in your own, let's say you've probably got a job, you're working full time, and you're trading on the side, right? Now, pretty much every single trader I know has to work their way into trading full time. Like trading and working a job, yes, you have to do that. It's not the whole quit your job and focus on trading and hope that you're going to succeed. You're better off just getting a shitty dead-end job that you don't mind, that you can tolerate, that's not completely draining you at the end of each day or at the beginning of each day so that you can show up to the charts, right? But pro trader strategies, they're not that time intensive. Even day trading, an hour, 2 hours a day, you can do it less if you are working around a job. You just get more efficient at doing the job, right? Right, so I've just cleared these boxes here to make it as conservative as possible, as bare bones basics as possible, to show even those results are pretty good. So let's say you just passed one prop firm account, you got your 100k. Your monthly income is we don't really need to consider that. Let's say that you're making $4,000 or $3,000. This doesn't actually make any difference. But the main point here is that we're not saving any of our own personal income. Let's say you're working your job, 100% of that, which I don't recommend, but 100% of that you're putting, you're spending, right? You're living paycheck to paycheck. Let's say that, right? Now your increased savings, so you're not saving anything, so that's 0, 0. So this is pure trading results only, right? Your starting account size is 100,000. Let's actually make that 0 for now. 100,000. Your effective tax rate is typically you don't pay to, depending on which jurisdiction you're in. You may not need to pay tax until you make a withdrawal, depending on again what jurisdiction, if you set up as a company or whatnot. But 0% tax is until you start taking income from your account. So the main thing here is if we're just purely focusing on scaling and not making any withdrawal whatsoever from our account. Now I've set mine up in a clever way that while I've been stateless, jumping around between countries and living in Bali and all that, I haven't had any tax obligations. That may be changing with my new location where I live. But perhaps Thailand or Malaysia, both of these have territorial taxations, which means that you only earn income if you earn it in the country, if you're using their services and such. So if you're living in Malaysia, you effectively don't have to pay any tax if you're a trader, which is awesome, right? Only in the money that you bring into the country. So let's start there and then we can see the difference as well. But let's say you're making 5% return per month. Now, keep in mind, this $100,000 account is a prop firm account, so you're only keeping 4% of that 5%. That's the typical, it's about an 80-20 profit split, right? So you can probably see where this is going. In 5 years, if you took 100% of the 4% that you return, so let's say first trading month, right, $100,000, total market returns $4,000, you took that $4,000 and you reinvested it. And you're just living off your job income, right? Whatever that is. You're not saving any of that. Let's go 3 years from now, this 4,000, and you'd take that 4,000, you'd put that into your personal trading account, right? Your personal trading account would be $410,000, and you'd be making would actually be a little bit better than that, because this is provided you're only getting 4% off your personal account. So your personal account would be 5%, but you'd be making in the ballpark somewhere between $28,000 and $16,000. That's if you passed only one prop firm challenge, and we're making that 5% return per month, 16 grand a month, right? 400,000. That's in 3 years, right? So as little as 3 years. People ask me how long does it take to become a full-time professional trader. It's shouldn't take more than 3 years. Now, let's say that your first 2 years it takes trying to figure out trading, and then you move into getting your past one prop firm account, past a second prop firm account. Most people don't need $32,000 to live off per month. So let's say even in your first year, if you could have two prop firm accounts, you're making 4 or 5% return per month. That's your $8,000 a month if you've gone through the curriculum, how to turn $2,000 into an $8,000 monthly income. And that's how you do it, right? And over the course of a year, if you scaled that and compounded that, you just stayed in your job an extra year, that $8,000 monthly revenue would turn to $12,000. You have 320 to trade with. Now the numbers get pretty bonkers when you move up to 5 years. Making $80,000 a month. The good balance, and this is what I'm working towards, is a 2 million funds under management, whether it be my personal or managing for a prop firm. $2 million at 5% return with an 80-20 profit split. That's if 100% of it is prop firm capital. You keep 4%. You make 5%. You keep 4 of that 5. So you keep 80,000, because 100K is what you'd get as 5% return on 2 million, and then you keep 80% of that. So you keep $80,000 that month, right? Now, what I love about the $80,000 a month figure is it's approximately $20,000 a week, which $20,000 a week over 50 weeks or 52 weeks is $1 million a year. So if you want to be on making $1 million a year, which, as we know, to be a millionaire these days isn't what it once was. Not that I've I'm not a millionaire yet. But to be on $1 million a year is the real objective. I reckon that's as they say, income is the outcome. That's what you want is the income, to have a net worth. There's a lot of net worth. I've got friends, family, like most people in property, they're property millionaires, right? The home that you live in is worth $1 million. Great, you're a millionaire. But that doesn't really count for much. You can't chip off a brick and go down to your local travel agency, if people still do that anymore, and buy a cruise to around Alaska with a brick off your $1 million house. It doesn't work that way, right? So anyway, income's the outcome. You want to be on $1 million a year. Well, maybe you don't, but that's kind of the objective here. That's scaling. So 5% is all you need to do. I did 4.19% this last week. Right? I'm on track to be on a double-digit month. So once you start playing around with those numbers, if you can average an 8% return, well then, Jesus, you can really scale quite aggressively here, right? 8% a month is, I don't average that. I average about 5% a month or 6%, but it fluctuates around. So, the difference between, and then this is where you've got the crypto bros that are saying, bro, it's not worth it unless you're making 15% a month. And you're like, yeah, I don't know anybody ever that makes 15% a month. And if you do, well, in 3 years from now, I'll check in and you should be worth $30 million and making $4.5 million a month. Maybe there are people out there that are doing that. That's bloody fantastic. But this is where 5% is kind of that sweet spot. If you can do more, if you can even get up to 6, that's great. But the main thing is 5% a month, and then scale up your prop firm accounts to $1 million. Keep pushing. Keep scaling those guys. That's the one. Even to get to one prop firm maxed out at 400,000, it's a good one. And then scale and compound from there. Anyway, moving on. I digress. Weekend intensive. We have this coming up this coming Sunday, guys. I'd love for you, and we will going to get into the weekly market forecast in a moment. I know that's kind of the point of this, but I really want to cover quite a lot today. You've probably all been sent out this email here. If not, pause the video, have a quick skim of this. Pause here. Pause read. Pause read. This is really good event that I'm hosting for 5 hours. It's going to be fantastic for all novice traders. So that includes people who have never traded before, never looked at a chart before, all the way through to, you're still in your kind of your first 6 months of trading, but you're kind of finding some either resistance to showing up each day or you need that bit of momentum. So it's primarily if you've only completed the essentials curriculum maybe once, or you're still working through the essentials curriculum. If you've been here for a year or more and you're already moving and shaking, you've placed like 100 trades and you're very familiar with Pro Trader, it's going to be much of the same stuff. But if you're in your first kind of 3 months, 6 months, or brand new, this is going to be fantastic for you. Show up. It's free for all Pro Trader members, but you have to be a member, right? Now, we do have a very cool offer here, and I've just relaunched the referral program. I'll send you the link following this. If anybody now, you don't even need to get your affiliate link created for tracking purposes, because I have a new dedicated page here, which is this Pro Trader affiliate, this school.protraderx.com/p/affiliate. I know it's kind of a mouthful, but I'll send that over to. You can use that link. If anybody uses this link, I will know that the person joined via a refer a friend bonus. Now, if somebody comes in, let's say that you send this out to your mailing list and you get a couple of people, or you give it out to your friends and your family, and you're not sure who signs up, and if a name pops up, you'll see them show up in Slack, of course. But let's say that if they're not attributed to somebody, I'll be reaching out to our affiliates and being like, hey, who signed up here? I'll post a public thing in the general chat being like, hello, Susan, welcome. Good to have you here. I see you joined on our refer a friend bonus. Who was your referral? I'll put that publicly in the general chat, and then whoever puts their hand up, they get that. So you get 25% of all the new members spend. So there's on this. So they get a 30-day free trial, which we're not offering anywhere else, which is pretty cool. That's differentiate. Now, we have from time to time run the $1 first month offer. This is 30 days fully free, and it's $79 a month after that. and they're going to get tagged as a referred friend. So anybody right here, right now, if you take a screenshot or you write down that link there and you send it to your uncle and he signs up, or your friend or whatever, then he comes through, I'll know that it was from a referral. And 100% of those, like, I don't share this link with anybody, so if somebody signs up on this, I know that I owe one of you guys money. Put it that way, right? Cool, that is that. And then let's jump over to our watch list. There is lots of good stuff shaping up today and the coming week. Now let's fly through. These were a couple of potential setups that I didn't take, but I don't think we've really got time to cover them now. I've been waffling on quite a bit. Oh yeah, this was CAD Swiss. This was a good one that didn't quite trigger. I like this one, momentum to the upside. Beautiful CBO here. We had the 4 hour, had the 1 hour break retest, looking good. I placed my entry order here. Didn't quite trigger, but he would be running off quite generously now, 1.64%. Didn't happen, unfortunately. Just didn't quite trigger us in. I was a bit late in the day for this one, but anyway, alas. CAD Yen. That one there. Oh, that was CAD Yen was the alternative to Swiss Yen. Oh no, it's Euro Yen. We didn't cover that one. This is the one that I'm in right now. So I'm in this one. My bad. This happens sometimes, right? So it was this IBO setup. IBO A. So with IBO A's, I've refined my methodology. IBO A stop placement is the same as the CBO stop placement. It's only IBO B's that have the wider stop. That's a little minor refinement. So this ran up here, hit this, and then I was trade managing. I was meant to put my stop loss down here, but I did the old-fashioned one, the classic. I haven't done this in a while, but is when you put it on TradingView and you don't put it on, and you don't put it into your MetaTrader. So I didn't copy that along, which is a big violation. This is a bad, it is a mistake, right? Or just an execution, a human error rather than emotional error. So I didn't do that, and had I done that, I would have been closed out just at the end of last week at a 0.4%, which would have put me up to 4.59%, almost a 5% week. That would have been fantastic. But it is running a bit more, it's now running favorable. So trade management methodology, so we're at 1.36 now. I'm going to wait to see if we start getting deceleration to a manual close. But this trade is getting a little bit long in the tooth now, so I'm looking at potentially exiting it unless we get momentum spring into gear and this breaks this level. But after this recent rejection, I'm no longer that confident trading through that through this high, and I lost that confidence of trading through that high once this rejection happened. And this is when I was looking at, okay, my secured profit down here behind that low, but I didn't exit when it should have, because I didn't replace that and place that order. So let's fly through mains of the day. Now these are a little bit more advanced setups. These are ACBs, and we haven't spoken about these in quite some time. But we've got a bearish candle here. We have a major resistance level here. Rejections, 4 of 4. Major rejections there. We do have a candle showing sign of a confirmation. We've got a wedge pattern here forming, and we've got the 4-hour 50 EMA. So we just need price to touch that 4-hour 50 EMA. And then we enter it on the break to the downside, and we trade down to the bottom of here, and it must be at least a 2. So we place our stop placement. Our stop placement is determined by our profit target placement. So we always target the recent low. Depending on where we get in is where we place our stop loss, and our stop loss is 2. Yeah, so that would be our stop. Something like that. That would actually be quite a nice stop, because we have some kind of support level around there as well by the looks of it. Yeah, that would be that setup. I like that one very much. It's on main watch list, but I'd like it just to pop up and attack that 4-hour 50 once, and then start breaking to the downside, and away we go. So the ACB is a big break and retest of that 4-hour 50 EMA, pull back to the 50 EMA. It always trades through the 1-hour 50, so we ignore the 1-hour 50 for all intents and purposes for the ACB. But as a substitute to the 4-hour for the 1-hour 50, we need a price action pattern, which we can see we have this sort of either a wedge, or even if we look at it like this, it's a triangle pattern here, high, and it's stalling at the top of that triangle now. It's looking like it could be approaching a breakout soon to the downside, but I just need to see it take out these highs here, just run up, tap that 4-hour 50, which is just right around there, and then make its move to the downside. That's what I'd be looking at for that one. Pound dollar, I think it's quite similar. We haven't really got the cleanest of price action patterns, but we do have the daily 50 here, which is quite nice. If not, we could certainly be looking for breaks to the downside in the coming days. But this one's sort of shaping up to be an ACB as well. If we go ahead and see, we've got like this. It's not quite as a favorable pattern because it is looking like it is kind of holding the 1-hour 50, whereas the other one it wasn't. But it's that 4-hour 50 that's being rejected. We had that nice high test candle. If we had that 4-hour high test over on pound yen, I'd probably already be in this position. But it is looking quite nice. You could take this one as an ACB. You'd enter on either the 5-minute 50 EMA break, or you could even take this one. You could even take this one as an SBO, which is very similar, except it's a swing setup, and you'd be entering on the break of the 1 hour, stop behind recent high, and then your profit target is whatever you would so choose, probably down to these lows here. Possible. Let's fly through. A lot of them are kind of ACB style setups, what we're going to be looking through the list here. So this one here, should be on developing watch list really. Oh no, this one could be that's right, it could be a within the next 24-hour setup. If we get that break and retest to the upside, it'd be a CBO. Wouldn't be taking the IBO because the 1-hour 50 is too close. 4-hour 50 is up here, so break retest, trading up to perhaps up to these highs here. And we can see the uptrend is still intact, looking very nice. We're getting deceleration on that 20 EMA. Euro Swiss, so this one's shaping up for that similar ACB style setup. I don't like this one actually quite as much because it's already broken above that 4-hour 50 EMA. But we can see we had this similar style triangle pattern here. It's this break above the 4-hour 50 that I don't like really. That one doesn't even belong on watch list. This one here is looking for a possible, if we saw I know this one's purely just a power trend. For our novice traders out there, no, it's not quite because it hasn't pulled back to the 2050 EMA zone yet. This one would just be developing, looking for potential pip snatches long. If this starts popping to the upside, I really like the uptrend here. It has pulled back. It's stalling at the support level here. We'd be looking for pip snatches long, but that'll be developing. Nothing today. This one here is also developing. Lots of these were supposed to be on developing. So we can see big run, big pullback, waiting for deceleration, pop to the upside, stalling off that 50 EMA, recent support, looking pretty good. So we just need those kind of breaks to the upside and start looking for long positions developing later this week. Pound CAD. Now we have a bit of a correlation inverse here. So we saw that one was like a pound Aussie, I think it was, long. And this is looking like a pound CAD short. Right, so have we got long or short bias on pound is going to be the question. Nothing today because we've got, today's candle doesn't count because it's still developing. But we could, and it's too far away from the 4-hour to have an ACB like the other one. But this could possibly start breaking down in the next 24 hours, and we might be able to catch some short entries here. Pound Swiss. So this one here is shaping up to be sort of an ACB. I don't like it quite as much as pound yen because of this is just more of a range than it is, or a channel, parallel channel rather than a that triangle or wedge pattern that we saw. It does look like it's holding that 4-hour 50. So if it got momentum to the downside, it could be an ACB. Parallel channels that don't really suggest like an indication of a break to the downside. So it's not really a supporting price action pattern, but it's okay. It still is if we start seeing it break, but it's just not as strong as what we saw over in pound yen. But it's one of those as a substitute. Pound CAD we already looked at. Pound Kiwi, and I think the that resistance level wasn't quite as juicy on pound Swiss as what we just looked at on pound yen. This is a pretty, speaking of support levels. Looks like price down here supporting. Don't know what we've got here. Oh yeah, next 24 hours we might get a like a power trend long if we get a candle close here. So these ones are mostly swing setups. Probably not enough room for an IBO or an IBO or a CBO is going to be a bit later. Looked like there could have been a solid IBO here, but that's always a risk that you run. I mean, entering really early in the week, because we've only just had the new market open, right? Yeah, that actually looked quite good. It looked quite good. Apart from we didn't have a solid DDP, we had two pretty chunky momentum candles, one doji and another inside bar. Again, we need 3, and we didn't have any confirmation, so it would be a little bit aggressive if you had entered this one. You would have just been stopped out on this, especially in the beginning of the week. Getting this aggressive after quite a bit of momentum to the downside and like a baby standstill deceleration. Same reason why this wasn't really deceleration. You need 3 candles, right? Or something that's more convincing than that or that. This is like a run, stall, run, stall. Like we need a 3rd candle. So if you had got on this one, I'd say review your trading plan. It's not. I could see how this one could be quite baity to break retest, because we had the 382, we had the pivot line, we had all that stuff. But again, the daily reigns supreme. But there could be long setups presenting in the next 24 hours or so. In 24 hours or so, I should say. This one here is, this is looking like a bigger, kind of an even larger, kind of like in a high time frame, or it is a high time frame ACB here forming. So we've got this triangle formation on the 4 hour, the 1 hour. Interesting to see what happens on this. I don't foresee anything happening anytime too soon, because we've got quite a bit of space here. But if we start seeing a break to the downside, this would be an SBO if we saw like a bit more oscillation here, because it's not an ABO. It's not really, it's a bit too big for that. I mean, it could maybe be trading all the way down to here. Be more of an SBO. If you guys are familiar with them. Again, we're talking playbook strategies here a bit, just because that's what's presenting, right? And this one here is another one of those ACB style formations. When you've got a lot of the same setup or same strategy presenting, it can indicate maybe this is going to form. So it's a toss up between, this one's not bad actually, Kiwi yen and pound yen. I'd say pound yen is still slightly better. Kiwi yen also could be a good play. It's because it's flapping around the 4 hour 50 already. It's not really giving us a firm rejection of that 4 hour 50, which is what we're waiting for on pound yen here. This is shaping up real nice. If that hits that 4 hour 50, away we go to the downside. Cool, that is everything, guys. What do we have? One more here on the Nikkei. Oh yes, another actually very nice ACB formation there as well. Maybe that one is the best of the bunch. Maybe that's the play. Have we got a significant resistance level? Sort of, maybe. That one's very similar to pound yen. Yeah, if we start getting a break to the downside, that could be the play. Just needs to pop up here a little bit more. And then we enter on like maybe the 5-minute break. Yeah, well, maybe it'd be 15-minute break, because he's already, on that 15-minute break, boom, that could be the entry. Targeting recent lows of the price action pattern. Stop loss up here at 2, maybe 2.5 would be fine on this one. Boom, just like that. That's the setup, ladies and gents. Guys, that is it for this week's weekly market forecast. I know it was a little bit chunkier. Thank you all for sticking it out with me. But yes, go ahead and weekend intensive. So if you've got folks that want to join that, pretty cool. Just go ahead and send them this link here. They'll get on the 30-day free trial, right? And then I'm going to message them, and they'll be on our mailing list and everything, and they're going to get all the invitations. I'm going to be posting a lot in Slack. Get them in Slack. Once they enroll on this, they get access to that, and then that's where I'm going to be posting a lot about the weekend intensive. So it's free. It's free. Maybe even your spouses or loved ones, if they want to attend to see what it is that you're learning to do. I'll be covering all of that on the weekend intensive. It's 5 hours. The hours are, as we can see over in the email here, from. Did I not even put the hours in here? Here we go. This Sunday, and these are your times, wherever you're based. Kiwis at 7 p.m. It's going to be 7 p.m. till midnight, so it'll be a later session for our Kiwis, but we didn't want our Brits having to wake up much earlier than 8 a.m. on a Sunday. So, trade-off. Anyway, guys, that is it for today. Peace and love, and I'll see you all on Wednesday. Happy trading this week.